If inflation in the United States is more stubborn than in the eurozone, then the US dollar will have more reasons to strengthen, experts from Danske Bank said. Analysts from many other financial companies share a similar viewpoint regarding future sentiment in the currency market. Dutch Rabobank sees opportunities for a broader advance of the US dollar in the spring as the market participants adjust the pace and timeline for monetary policy moves in the G10. Of all the G10 currencies this month, the Swiss franc and the Japanese yen were the weakest against the US dollar. Since the rate cut by the Federal Reserve was postponed to a later date, the American currency was able to assert its strength. However, today, one of the governors of the Bank of Japan, Hajime Takata, said that, in his opinion, inflation prospects will finally allow the regulator to abandon the negative base rate. Since investors took profit on the carry trade using the yen and the negative interest rates, such prospects turned the market around. They reinforced the Japanese currency against both the US dollar and the euro. The inflation data for the eurozone will be available tomorrow. According to flash estimates, the annual CPI is expected to slip to 2.5% in February. Today, the market got to know inflation metrics for the two leading European economies, Germany and France. The CPI in France is to 2.9% in the annual terms, the lowest level in 2 years. Still, the reading is stronger than the estimated 2.7%. Inflation in the world's third largest economy declined to 2.5% on a year in February. Besides, consumer prices in Germany fell by 0.4% from a month ago. And today, Germany also released a report on retail sales. And this indicator measures domestic demand and serves as a barometer of economic conditions in the powerhouse of the Eurozone's economy. Retail sales in Germany got stuck in a negative territory for the third month straight. Despite the reading at minus 0.4%, retail sales slightly improved in January. And the annual change in the core US PCE price index dropped to 2.8% in January. At the same time, weekly unemployment claims jumped sharply to 215,000, and thus the US economy is going through a decline in inflation and the labor market. These are arguments in favor of lowering the official funds rate by the US Central Bank. In light of the reports, the US dollar index slipped to 203.8, followed by a minor bounce. Experts at the Danske Bank predict the clear-cut bullish scenario for the US dollar. Indeed, the greenback is set to strengthen even in a case of a growth in the United States stock market, where Street trades dollar-denominated assets. Thus, growth of 3 benchmark stock indexes should benefit the US dollar in the medium term. The S&P 500 has been firmly trading above the 5,000 landmark for more than a week, and the index has been consolidating in a narrow corridor between 5,050 and 5,100 points. And since stock markets lost ground on early Thursday and the yen and the US dollar strengthened, the only thing left for the euro to do today is a pullback. Even after the publication of inflation and unemployment in the American economy, the greenback is still setting the tone for the euro-dollar pair. On Friday, the euro is unlikely to get a reason to strengthen. Judging by inflation rates in Germany and France, tomorrow's reports in the eurozone will also show a decline. Let's see if the euro will get its inflation surprise. In the meantime, the euro-dollar pair first rose due to the conflicting reports and then moved into the bearish zone. So the euro has particularly returned to its previous positions in the range of 1.0820 and 1.0840. If the instrument breaks above the 1.0850 resistance and remains stable there throughout the day, it could print more gains. Until then, the intraday candidate is seen between 1.0800 and 1.0850. Oil prices are trading mainly flat today. Brent crude has been trading slightly above $83 per barrel for the second day in a row, and this is close to the upper border of the range of 82 to 84, in which the price has been trapped for almost a whole month. Sometimes the price makes attempts to go below these levels. To attract buyers, Brent needs to settle above $83.50. Curiously, over the past couple of days, even data on the growth in the US oil inventories didn't have a significant impact on oil prices. Everything looks like the market didn't even notice them. Most likely, in the short term, oil will directly follow the dollar's trajectory. Therefore, until tomorrow's publication of inflation data in the euro area, the situation will not change in any way. You have watched the market review by InstaForex Analysts for Thursday, February 29. Subscribe to InstaForex TV channel, and we keep you updated on recent market developments. Don't miss our videos. Your feedback is appreciated. See you online tomorrow.